Hello and welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. In today's video, I'm going to be taking a look at the stock market, macro charts, and indicators. And starting off with fear and greed, you can see with the stock market, it was hanging out in the neutral territory just earlier this week, but has dipped back down into fear. So it is spending some time kind of bouncing back around between fear and neutrality. Going over to this chart, I think it's still holding true right now for a lot of stocks out there. And that is ever since the inauguration, we've been seeing stocks go sideways or slightly down since that time. And so, if that includes one of the main stocks that you're paying attention to, then you can see here at the bottom. Sometimes that lasts for an average around 100 days. So that's not untypical. And also, we have this chart here as far as years of the presidential cycle and which ones are the strongest and the weakest. And something I've been talking about on this channel with the yield curve inversion and with other macro charts is that we need to be paying attention to what would be the second year of the presidency, 2026. There may be some turbulence around the corner. So, as we are looking at these stocks, do try to be patient, of course, create a budget and understand that in the near future, we may see a little bit of a downturn. So, just something to keep an eye on or to keep in the back of your mind. And ever since the Fed cut rates last year in September, we have been in a non recessionary cycle. And so once they start raising rates again, or if they start cutting by 50 basis points consistently, then you know something's broken, but that doesn't look to be happening anytime soon. Another macro chart to keep in the back of your mind, we showed the presidential cycle years. I think this may line up with what we see as well, and that is the S&P 500 price to earnings ratio. And that overall, what this is showing us is that stocks right now are expensive. They are not cheap. The mean line is around 15 or 17, around that area. And that's when stocks are at about their average price. And so right now, stocks are expensive. Can they get more expensive? Sure. This bubble may get even bigger. And I think what this line is showing us is that we are right on the precipice of a bubble, the AI bubble compared to the dot-com bubble in 2000. And taking a quick look at crypto, because I know that's why many of you are here, and seeing how the stock market is moving, because that affects how the crypto market's moving. And as you can see, we were finding these bases in neutrality and a little bit of a jump up towards the greed area. But overall, ever since November of 24, we have been in this downtrend. So there was a nice base here. Maybe we start moving to the upside, but we'll see. This downtrend has not been invalidated yet. And let's move on over to stocks. So as far as the weekly, what do you see here is that this week the S&P 500 is putting in another new all-time high. Going over to the daily, we can see that reflected just a couple days ago. We see that the S&P 500 peaked somewhere around 6150, is coming back down here. And if we add on our moving averages, a 20, 50-day, 100-day, 200-day moving average, that's red, gold, light blue, dark blue lines. You'll see here that the S&P is coming down to that 20-day moving average. So you might see a little bit of a base form there at around 6,070. Zooming way out here, what we have been in, or what we've seen the S&P been in ever since the great financial crisis, it's been in this ascending channel. And I'm sure any new viewers, if you're wondering what these lines are, the red lines are when the Fed is first cutting rates after pausing for a while. The white lines are when inflation peaks around that time, and the green lines are tops for Bitcoin in those cycles. So that's what those lines mean. And as far as this channel, what you'll see here is that in this channel, I drew some parallel lines from these prior peaks, and we've seen those lines being honored a little bit. But should the S&P continue to move up, the next target area I have macro wise would be somewhere around the mid 6,000s. So something to keep an eye on for the S&P 500. All right, going over to the VIX, this is the volatility of the S&P 500, and as you can see, the volatility is low, but we are seeing higher lows here. So something to keep in mind is if this starts breaking past these weekly moving averages, we are going to be seeing increased volatility and big price swings going on in the stock market. So right now, low volatility, but we are forming a higher base, so just something to keep an eye on. One of the charts I think is really good for sort of showing us, it is a good leading indicator in my opinion, and this is the percent of stocks that are above their 200-day moving average. And something that we see here is that this is stalled out recently at the 20 and the 50 week moving averages. So if this isn't able to get above, we may see another swing to the downside now. In recent history, ever since April of last year, the bottoms have been around when this chart shows us that we're at 50%, 45 to 50% of the stocks that are above their 200-day moving average. So that dips down again. That may be a local bottom, at least on the smaller time frame. So we haven't broke above this yet. So I'm being a little bit cautious on the bullish sentiment, at least in the short term. And this chart, which I think is this is one I want to add to it, add to our videos, and this is the chart that basically shows us quantitative tightening versus quantitative easing, what the Fed is doing with their central bank balance sheet. And what I noticed when looking at this chart and going over to the monthly time frame and having on our moving averages is the last time the Fed stopped quantitative tightening and started QE, you'll notice it's when it tagged that 100-month moving average, and that moving average is coming up. So I am wondering if the Fed does start to do some quantitative easing once it runs into the 100. We'll see, but that's what happened last time in 2019. I'm curious to see if that'll happen again. And at the rate it is sort of tapering off, that seems to be what's going to play out. So just something to keep an eye on. And again, going over to the macro charts as far as, we talked about how historically the second year of the presidencies, hasn't been so great. We have the S&P 500 price earnings ratio on the precipice of bubble territory. This is another chart that has preceded many recessions, and that is the yield curve inversion. So anytime the yield curve's been inverted, once it uninverts, typically the recession, those red lines I put in are the bottoms of the market. And you can see after the uninversion, 550 days to the market bottom. For this one, it was about 600 days. This was the COVID brief inversion. And so if we're just looking at that and making some one-to-one comparisons, which doesn't usually play out, but 600 days, give or take, would put us around May of 26. So is there going to be a market bottom May of 26? Another chart I want to start adding and showing weekly in these videos is the ratio of when the S&P 500 is having a 20% correction, 30%, 40%, 50% correction, how infrequent that is. And if we see that happen, those corrections, historically, the ratio for that to happen has not been that often. So when the market turns bearish, whenever that happens, whether it's 2026, 27, who knows, later this year, we'll see. Whenever that happens, you want to be ready to strike, because when we have those big corrections, it does not happen often. So we are seeing some writing on the wall, and we want to be ready for those moments. So just this would be like the start of the fourth quarter, in my opinion, for any sports enthusiasts. It's the start of the fourth quarter. We may see a little bit more of this bubble play out, and then eventually the correction will start, maybe in 2026. As far as the unemployment rate, Recently, it did have a tick down from 4.2 to 4.1. And so inflation, we'll take a look at inflation as well. And so if unemployment's going down and inflation's going up, the Fed isn't going to be cutting rates anytime soon, most likely, with these indicators. So that's as far as the environment we're in right now. Now, if unemployment starts to spike and inflation spiking, then you get into one of those stagflationary types of environments. And hopefully we don't get there, but you never know. There does seem to be quite a tricky dilemma for the current administration as well as the Fed to deal with because the debt is so high and they have to pay the interest on that debt. So that's why those guys get paid the big bucks to screw things up more than they already have. Anyways, looking over at Bitcoin, let's go over to the weekly. And as far as the weekly, what we can see here is that we have this trend line Bitcoin has been staying on. And this is the trend line from the double top from the last cycle. And if we go over to the daily, by the way, before we go over to the daily, you'll see the weekly still a little bit away from that 20-week moving average. I would not be surprised to see Bitcoin run into that. That's at around 90K. On the daily, this to me is looking kind of bullish. We've had two nice wicks get bought up off that double top trend line as well as the 100-day moving average. And this 50-day moving average, it has been resistance. And right now, Bitcoin's trying to get above that. So if Bitcoin can start closing and we see whole candle bodies like here, get above the 50-day moving average, then maybe that could be the start of something bullish. Now, back here, you can see that as these moving averages were tested, once we start closing underneath, you can see that's where it flips as far as these moving averages from one side to the other. Anyways, let's get into stocks and let's take a look at NVIDIA. And NVIDIA overall, just it's having a nice move up. We got about 5 green days here, 5 or 6 green days there, and so it is above its daily moving averages. We've taken off the fib as far as recently. Let's find where the high is, and let's draw. There's many different ways to draw a fib, but if we just draw a high to that recent low, then what do we see here is that this fib, it is running into a little bit of resistance. That's the 786 right there. So for NVIDIA, you want to see it get above 143, but if it starts to come back down again, we have these daily moving averages in the 0.5 around 131, and that might be the next area. But overall, you can see NVIDIA, it's like that 200-day moving average, and it has not hit that 200-day moving average in a long time. So some possible value there, or this, you can see we have some lower highs here. Is NVIDIA getting ready to roll over a little bit? We'll see, but right now you would want to see some of these prices get broken and get above there. But if not, watch to see what happens at this 0.5 area, around 130, if it gets there next. Let's go over to Microsoft. And for Microsoft, we have this macro fib drawn from the high to the low. And you can see this fib is off log right now because Microsoft's price, it's been hanging around this 1618 area at around 430. Now, it was in this large wedge here. And as you can see, the price, it did come lower. Now, if we drop from that wick, then it lines up a little bit better here. Let's make sure that we get this as exact as possible. So technically speaking, yes, you're still inside this giant triangle or this flag pattern wedge, whatever you want to call it. As far as this is something to keep an eye on. As far as the weekly with Microsoft, what do we see here? Well, the weekly historically has been the divider between bullishness and bearishness. So if Microsoft loses this wedge, if it loses this 50-week, that's something to be concerned of. And again, talking about historic ratios, how often has Microsoft been under the 50-week moving average? Now, you could say this is good discount territory and time to dollar cost average in, you're getting better deep value. Yes, I would still wait for confirmation. So just know historically, as far as Microsoft being under the 50-week, we can just go back here and you can see that 50-week has held up quite a bit. We can go all the way back towards the great financial crisis times. Ever since the S&P's been in that uptrend, And Microsoft, you can see here since 2013, it's gotten under once, twice, three, I guess 4 or 5 times, six, seven, 7 times since 2013. So within the last 12, 12 years, 11, 12 years, Microsoft has only gotten under that 50-week moving average. So something to keep in mind. This is why we have on moving averages. And again, yes, they can go lower, can go to the 200, and that's where you find more value, more of a discount. And in many people's opinions, Microsoft is the best stock in the world. So if we see Microsoft and Nvidia breaking under their 50-week moving averages, that is something that you need to pay attention to. So do know historically that hasn't been common, but this has been in an uptrend for a while. So if a big recession is to be happening, because we really haven't had one since 2008, 2020, black swan event, nice V bottom reversal when that happened. This one, people debate whether or not it's a recession. Technically it was, but it was the softest recession possible. Then, yeah, something to look out for as far as these moving averages are concerned. Anyways, Apple. Apple, right now, it has bounced off that 1618. Still bullish, but we want to see, you can see as we zoom in here, let's go to the daily. It's trying to challenge this high here at around 247. If it gets past that, you want to see it challenge 260. And then the 2618, where people are probably going to take some profits, would be around 278. Do keep in mind, for any new investors, market cap. Apple, if it gets up there, it's going to have a market cap around 4 trillion, probably the first ever stock to have a 4 trillion market cap. So if you were to invest $10,000 into Apple when it gets to 280 at a $4 trillion market cap, and you want to double your money, then you are waiting for it to get to 8 trillion. And do know that's probably not going to happen anytime soon. So when we're looking at these bigger stocks, which are the safest ones, you don't want to buy it when it's within the range of all-time highs. When you look at these moving averages, a 200-day moving average, the 50-week moving average, those tend to be good times to buy, even the 100-week there. So Apple, if it gets above that 260 area, then again, watch for 280. All right, let's go over to Amazon. And Amazon, no doubt that's got to be a sell signal. Yep, we have a weekly sell signal recently with Amazon. And right now, as far as the uptrend, anytime I'm looking at these moving averages, I'm looking at where do they commonly have bounces. You can see the 20-week moving averages and the 50-week, even the 50 and the 100. I guess you can say, so if Amazon gets under these 20-week moving averages, then start to look for the 50-week right there at around 196. Let's go over to the daily. And the daily, Amazon's been going down for about 2 weeks now, so it does look like it wants to get to that 100-day moving average. And that 100-day moving average is right at around where that local bottom is to the left here. So watch for that price at around 216. Let's go over to Google. And Google, you can see once it broke out of this wedge, it hung around the 1618, stayed above it for a little, came back down and has now found support at the 100-day moving average. Now, look horizontally to the left. You can see that's where some local tops were. So you want to see this hold. If Google starts to break under that, that is concerning to me. So red flag number 2. I know NVIDIA, that one I'm not ready to call it quite a red flag yet. But as far as what I'm seeing on Microsoft and Google, just something to keep an eye on. These are some of the top stocks in the world and within the top 5. So you do want to pay attention if these do start to show some level of bearishness. On the weekly, I mean, big doji right there. You can see that 1618, it was just barely held. And right now it's at the 20 weeks. So on the weekly for Google, what is it like in the past? The 50-week moving average. Like I said, the dividing line between bullishness and bearishness, whether it's moving in a trend upwards or down. So that area would be right around the low 170s. So if it breaks under the 20-week moving average, pay attention to that. And as far as Meta, for some reason, this one is just the most strong of the mag stocks, and that 2618 is at around 862. So an area to pay attention for. Meta just keeps bouncing up off that 20-week moving average, and a recent bit of bearishness, but nothing Meta hasn't had before. If it did come down to its 50-day, then that's around 657. Let's go over to Tesla. And I've also been talking about Palantir recently as well. So we'll take a look at PLTR. With all these stocks being a little bit bearish in recent memory, or ever since December, Palantir is probably looking, even though it's done well, probably got some negative price action within it too. Tesla, back in the channel, it was hanging around this 888 fib and the 100-day moving average. If that 888 fib gets lost, then next you'd look for the 200-day moving average and the 786 at around 304, somewhere around there. And then lastly, going over to Palantir. Let's see how Palantir is doing as this loads here for a second. All right, trading view, what's going on? All right, Palantir. So we are on the weekly right now. Now on this, you can see again, drew a fib from the high to the low. Palantir kind of hanging out, getting stuck at this 2618, which is at about 108. We can see the price is at 106, so it's probably underneath the 2618 right now. And going over to the daily, yeah, that's what we see. So daily sell signal, however, no, 2618, the 20-week moving averages, it is showing some level of support. Again, going back in time, you want to take a look at, in the bullish trend, what has it liked in the past. So it is like the 50, the 20-week moving averages. It did get down to the last August when things got pretty bearish to the 200. Now, if this got more bearish and hanging out up here, I would not be surprised to see Palantir come back down to retest the 1618 in between the range of 70 to 90, kind of in this area. You can see that's where we have prior price action. We got some moving averages in there as well. And this one is just ripped. This one is just ripped ever since December of 2022. So kind of like NVIDIA, Meta, this has been another one of those where we're talking about 2,000%. So definitely definitely an area to consider taking some profits. Excuse me. So taking a look at its market cap, this is at around 250 billion. So would I be buying Palantir right now? No. I mean, it's nowhere near its range of its yearly lows or anywhere near it, or any good discounted moving averages. I mean, even on the weekly, look how extended it is, even from the 20 weeks. So coming back down to the 20 week at around the 70s, maybe by the time it came back down, it'd be around 80. It's very extended right now. So as stocks, or even cryptos for that fact, when you see them rip up like this, do not be shocked if they ever come back down and test those 20-week moving averages. But if you were putting in $10,000 right now and you wanted to double your money, that's you saying that you believe Palantir will go to $500 billion and be at around 212 bucks. So is that impossible? No. Is it probable? I start to get a little bit cautious there. But if this market continues to bubble up, I would not be surprised. Palantir would be one of those stocks I would not be shocked to see get up there above the $500 billion area. But that would be definite profit-taking areas, in my opinion, if it got at or above those levels, as crazy as that sounds. Anyways, let me know what you think in the comments below. In about an hour, I will start a live stream where we will talk about all things crypto, the cycle, alt season, altcoin discounts, Bitcoin miners, all that stuff. So in about an hour at noon Central, we'll start a live stream. Thanks so much for watching. Have a wonderful Friday.